I want to put up a chart here that I actually borrowed from Peter Cheer over at Academic Securities, who sent out, which shows what's going on with the yield. And you'll see it was the highest back in 2011, spiked up a little bit in 2013, not quite as much. But this is his point, that every time it's had two bump ups against or down below a resistance point, it's broken out. This has been two times now. And so he's saying it's pointing toward 3.5. Does that make sense to you?
So I think the background here is that the U.S. economy is performing better. As the U.S. economy performs better, inflation is rising, the Federal Reserve is gradually normalizing policy. And I think what we're seeing is the 10-year Treasury return to more historically normal kinds of ranges. So what I see happening is a normalization of the long-term Treasury rate relative to inflation expectations and growth outlook. And, could it rise a little bit more? Possibly. I do think there are structural factors that are going to mean that long-term rates in this cycle are lower than they were in previous cycles, but exactly where the peak is, I think, is an open issue, and it could be yet a little higher.
We got retail sales numbers yesterday. We also heard from Rich Clarida, who's the nominee to be the new vice chair, and something he said was basically he thinks that balance sheet is too big, and also he'd like to get out of the mortgage-backed securities business altogether. Now, is that pushing the yield higher, and is that a form of the normalization you're talking about? Is Rich just saying, yeah, we're going to normalize maybe faster than we thought?
So the normalization of the balance sheet certainly is part of the normalization that I'm referring to. I would think that the Fed reducing the size of its balance sheet, again, gradually, incrementally, is putting some mild upward pressure on Treasury yields, but not significant. And I wouldn't expect the Fed to alter the plans about its balance sheet that have been announced. I think they wanted to press that button of balance sheet reduction, and they want that thing to be as close to possible to being on autopilot as they can engineer.